Hey, this is Ryan Chambers with Midwest Capital Mortgage, and we're doing a video for fun because all the time I get asked this question about how people can pay off their loans faster, and they see an advertisement on the internet somewhere about some weird misconception of simple interest on all of our loans and some kind of compounding misconception, and they do loans differently in other countries. Let me dispel all of that. Our loans work the exact same way as a simple interest calculation. And if we're really talking about paying off our loan faster, the math is pretty easy, and I'll show you exactly how we do it. And the difference between a simple interest and a fixed amortization schedule is really not hard. If we're going to pay off a loan in a certain period of time, that's just our term, right? The only way that we calculate out how to make sure that happens is something called the discount factor. Anyway, if we look at $100,000 loans, and let's just pretend this is simple interest, at 5%, that's $5,000 worth of interest in 1 year. If you divided that by 12, that ends up being $416.67 worth of interest in 1 month's period of time. If you look at our amortization schedule, the very first payment that somebody makes on a 30-year loan, as our example, they're going to pay that exact same amount of interest of $416.67. Then we add that discount factor to it, and that reduces their principal balance ever so slightly. And then if you rerun the numbers for the second year or the second month's payment, it's the same 5% times that little bit less principal balance. And once again, the process repeats and repeats and repeats. A simple interest loan, people pay interest on a daily basis. So our loans are actually advantageous over a bank loan, just at a simple interest bank loan, because we pay a fixed amount of interest every 30 days, every month, no matter what day that payment gets made on. So unless you have the discipline to pay the first of every month, our loans calculate out the exact same way as a simple amortization loan. So if people want to actually get ahead, which we always want people to pay off their loans as fast as they can, is you pay extra every month. That actually just throws you down the schedule faster to get your principal balance reduced faster. So don't click on the advertisement. All it's going to do is collect your information and throw you somewhere in weird cyber world. And just call us and we'll break down the math. We'll make it simple at Midwest Capital Mortgage.